Hey everybody, how's it going today? Well, in this video I have a special treat for you. I'm going to do a quick tutorial on how I like to buy low price stocks. And if you like to invest or trade in low price stocks, learning this setup in my opinion is an absolute must, and it will get you in early on big winners. I've used this setup over and over again to capture big gains in low price stocks, and I'm going to show you exactly what to look for. Now, before I get to the video, I just want to say thank you to everyone for subscribing and hitting the like button. I really appreciate it. And if you're new to the channel, I like to find short-term and long-term trading and investing opportunities in typically lower-priced stocks. I like to look for diamonds in the rough, undervalued, underappreciated stocks with high growth potential, as well as all other things finance-related. Now, if that's something that interests you, please subscribe so you don't miss any future trading and investing ideas. And also, I am a private independent investor. I am not a financial advisor, so please do your own research before making any financial decisions. Now, before I get started, I just want to be very clear about one thing. Lower priced stocks are almost always lower quality companies, meaning poor balance sheets, high debt, poor earnings, etc. These stocks are low for a reason, but that doesn't mean they can't go up though. You just have to be very selective on which ones you buy. Now, I've been trading and investing for over 20 years, and in this video, I'm going to show you the best trading setup that I know on how to capture big winners in low-price stocks. And when I say low price, I mean stocks under $10 a share. And just another quick note, I only use about 10 to 15% of my investing capital on low-price stocks. And the rest of my investing capital goes into high-quality growth stocks and high-quality dividend stocks. Stocks like Tesla, Square, Illumina, Waste Management, 3M, AT&T, and Disney, just to name a few. And in my opinion, this is a great way to build wealth. And when I have a big winner in these low-price stocks, I usually take those gains and distribute them to my high-quality stocks. Now, it's not as fun as betting big on low-price stocks and going through the huge swings in your portfolio, but this will build you wealth over time. Now, my high-quality portfolio is my ride-or-die stocks, and I almost never trade them, so it can get boring being a buy-and-hold investor. But trading these low-price stocks definitely keeps me interested in the market and up to speed on what's going on in the market. Now, personally, I would tell a new trader to stay away from lower-priced stocks because you have a greater chance of success buying better quality companies. But people are attracted to lower-priced stocks because they think they're getting more bang for their buck. That's why companies split their stock. They're aware that a lot of people simply won't buy their stock if it's too high because they believe it's overpriced, and that's just human nature. Now, in all actuality, a 50% return on an investment is still a 50% return regardless of the share price. But since people are going to be attracted to cheap stocks anyway, let me at least give you this setup and help get the odds of success in your favor. All right, here's a picture of a generic stock life cycle. Now, they all don't look as perfect as this one, but if you back out to the weekly or the monthly time frame and start flipping through charts, you'll be surprised how many stocks go through this cycle. Now, what we're trying to do is look for stocks that have been in the stage 1 base for 1 year or more, and I find the longer it's been in stage 1, the better. The next thing I like to see is a sharp 1 or 2 day price spikes on big volume and then quick retracements back into the base. Now, this tells me supply is drying up and this stock is potentially getting ready to blast off. Now, once that happens, I keep this stock on my watch list and wait for the big move up. Now, this usually happens on big news for the company. Now, those earlier price spikes were most likely people in the know trying to accumulate shares before the news came out. Now, after this big move up, I like to wait for a pullback before I get in. Now, this means I'll have to be patient because a pullback could take weeks. Now, after I do get in, more patience is also required because the stock could take weeks or even months to start the next move up. So this is not typically a get-rich-quick trade. Now, sometimes you'll see these stocks break out and they just keep going up and don't even give you a chance to buy a pullback. And for me, I find it's best to just let them go and wait for the next stock to set up because I've never had a lot of success chasing breakouts. Now, it seems like when I chase breakouts, everybody is just sitting back and waiting for me to jump in so they can start selling their shares. Now, Warren Buffett is famous for saying there's no called strikes in the market. So you can wait pitch after pitch, stock after stock for the perfect entry point, for one lobbed right over the plate, if you will, before you put your hard-earned money into it. Now, I know it's not fun watching a stock take off without you, but waiting for a good entry point has kept me out of a lot of trouble more often than not. Okay, right here I have a current chart of IBIO, and this is almost a perfect example of what to look for. Now, step one is this nice long sideways accumulation base. Then you start to see these volume spikes, which tells me someone is trying to buy big blocks of this stock on the down low. Then you get the big move up, usually consisting of a few days, and that's when I start to get interested. Then I wait for the hype to die down some and look to buy when prices pulled back most of the move and patiently wait and see if we get another move up. And if we do get the next leg up, your next problem becomes, when do I sell? And of course, that's anybody's guess because nobody knows how high a stock can go. All I can tell you is what I do, and what I do is implement what is called the incremental sell. Now, once the stock goes up, I start selling off some of my position. Now, it actually depends on the size of the position and the price of the stock, but I usually sell between 1/4 to 1/3 of my position off at a time. Now, I find doing this usually lets me capture a good portion of the stock's move, but what I think is more important is once the first portion is sold off at a gain, it helps me immensely from a psychological standpoint, because the first part is already a winner, so it relieves most of the anxiety of managing the rest of the trade. For me, there's nothing more frustrating than being in a stock and watching it go up and then come all the way back down and making nothing. It really sucks being right about a stock's move than having nothing to show for it when it's all said and done. Okay, here's another current example in a company called Blink Charging, ticker symbol BLNK. Now, somehow Blink eluded my stock screeners, but somebody was nice enough to comment on one of my videos and bring it to my attention. Now, as you can see, Blink had a nice long base with some accumulation volume spikes before it took off. Now, Blink is an example of one that took off without me. I was waiting with an order below $5 and it never fell that far. But oh well, it happens. I'll just sit back and patiently wait for the next one. Now, if I would have put my buy order in more aggressively, it would have worked out this time, but I prefer a better entry point if I can get it because it lowers my risk. Okay, right here is another example of a past winner. Trillium Therapeutics, ticker symbol TRIL. Now this one had a very nice long base, then started its price advance from approximately 50 cents to over $9 at its peak. Here's another example of a past winner, Dyadic International, ticker symbol DYAI. Now as you can see, this one had a nice long base, then volume spikes before the big run-up. After the initial price spike in October of 2018, price pulled back quite a bit, giving the perfect opportunity for a nice entry, then a few months later resumed its uptrend. Next we have Paysign, ticker symbol PAYS. Now this is a great example of another big run-up. Pays had a very nice long base starting in 2016 going all the way into 2018, then it began its uptrend, which gave a great opportunity to get in on a pullback in May of 2018 in the $1.25 area. Then over the next year, it just took off. Okay, the last example I'm going to show you is International Tower Hill Mines, ticker symbol THM. Tower Hill Mines had a very nice long base going back to 2017, and I'm thinking this could just be starting its run-up. Now, this is a gold stock, and gold's been very strong, so I'm considering buying some of this if it pulls back to around $1. Now, gold's been trending up, so I expect a lot more action in these lower-priced gold stocks if gold continues to move higher. Okay, folks, I think I'm going to end the video right there. If you enjoyed the video and got something out of it, please hit the like button. And if you like trading and investing in lower-priced stocks, I put videos out on them all the time. Please subscribe. Also, if you know of any other trading patterns, please leave those in the comment sections. I love learning about new patterns. Thank you so much for watching all the way to the end. And until next time, take care, everybody.